I'm going to be asking lots of questions throughout this. Okay, I'm going to be asking lots of questions, and the best way for you to learn is to, really kind of ask questions and interact as much as possible. Okay, no answer is stupid. No answer is. Oh, I can't hear you again, Abby.
Can you hear me
I
now?
can hear you now. Lewis, can you hear Abby?
I've got it.
Perfect. Okay,
Oh,
can everyone
that's
hear each other?
yes.
Great. Okay. So I'm going to be asking lots of questions. I want lots of interaction. No question is stupid. Don't be afraid to blurt out something which is completely wrong, because that's how we're going to learn. I want you to come back to me with your answers, and then I can help you really understand the concepts. All right. So I'm just going to jump into a chart. Let's open a new chart. Okay, and then I want that one. Hey, Alan, you're here.
Hello.
Alan, how you doing, man?
Good, thanks. You can hear me?
Yeah, I can hear you. Well done, dude. Thanks for joining us. Yeah, I was just saying to the boys, we are now we're going to be jumping into the charts. Today we're going to be going through the entry models. We've blocked out about 3 hours for this session, so we're going through the entry models, news trading, and kind of your daily setup. So how to set up your charts each day, how to approach the markets each day, and this is kind of how we're trading. So. Have you had a chance to go through the first 3 parts of the bootcamp, everyone?
I haven't. No, I only actually saw the second and the third one pop up yesterday. I
Oh,
just
okay.
noticed them yesterday.
Okay. Well, look, some of this, a lot of this will probably make sense. You've been trading for a little while, haven't you?
Um, the final little while.
Okay. Cool.
Like,
So
I started a while ago, but I didn't do it for very long.
yeah,
I did it for like a few weeks at a time, and
yeah.
then I would stop, and then I would do it again.
hmm Okay. Well, look, if anything doesn't make sense, this is what this session is for at the end of the day. So just jump in.
Yeah.
Okay. Cool. Everyone see the chart?
Yes.
Okay. Cool. So we discussed last week the ISC MSU setup, which is just the classic setup that we're going to be using, more often than not. So I'll talk you through that again, just so we can. I'll give you a nice drawing of it, just so we can see how it works, and then we'll go from there. So the ISC is ultimately a raid of major liquidity to the left. Okay, from there we're going to have. Actually, I'm going to get rid of that.
Can that liquidity be the external and range as well, or only external?
It doesn't really matter what liquidity it is. It can be internal, it can be external. So this is where we have to use. How to explain? So this is where we have to use all of our theory together. For example, this setup, and this will be a candle here, and then a candle
Because
here.
most of the time, the price, it doesn't take the external liquidity, sometimes not even range. Sometimes after taking the internal liquidity or the trend line liquidity, the price just takes the stop loss and fall.
So, sorry, explain what you mean.
So, what I meant is that there are many types of liquidity, right?
Yeah,
First is the key liquidity, that
yeah,
is the external liquidity.
yeah,
Second is the range.
yeah,
Third is the trend line one, that is there, right?
yeah,
These are the 3 types,
yeah.
as far as I understand.
Mm-hmm.
And I was not trading Forex, but I was trading the Indian markets.
Yeah,
And most of the times, the stocks or the index, they were taking the external liquidities,
yeah.
but sometimes they were just taking the trend line liquidities and falling. So
Yeah, I
what
mean,
I want,
I personally don't really trade trend lines. I sometimes, if I've got a really clear, if I'm looking at a daily time, like a daily chart, and I've got a really clear channel, for example, or a wedge of some kind, and it's too obvious to ignore or mark it on, I personally don't trade them. I like these flat levels. Really, this is really where I'm looking for my liquidity to be from. So I think for you, probably go back through the liquidity. So go back through the bootcamp that Lewis and I did a couple of weeks ago, because we talked about the various liquidities in quite a lot of detail. So we
Yes,
talked
and
about, yeah.
and you focused on the external one and range one.
Yes, yeah. So external, well,
External was the most important. External liquidity, session liquidities.
yeah. So you've got your external liquidity. That I would always class as the most important. That's where the mass volume of orders are going to be sat, and then from there you have your range liquidity, which is that last high before the external or last low before the external, and then of course you've got the external on the other side. So those are your types of liquidity. Alongside that, you then have various different grades of liquidity. So you've got weekly liquidity high and low. You've got daily liquidity high and low. 4-hour liquidity high and low. Basically, any significant high or low, okay, is a liquidity point. So that's a liquidity point. That's a liquidity point. The classic kind of high. If you draw out like your classic trend, for example, let me just get rid of some of this.
Is that similar to a support and resistance level, where the same level would be?
I don't really trade support and resistance, and I'll show you why. Okay. If I zoom out on this daily chart, and I take my ray line, and I do this. Okay. So those lines are all completely drawn at random. Agreed? When you do that, and then you zoom in, you'll find that these random lines that I haven't taken any time, all at reversal, breakthrough, reversal, breakthrough, okay? Reversal, retest, push through, bounced off that one, came back up, broken off that one, broke through that one, retested that area, broke off that one. So when you draw support and resistance on randomly, let that one perfect to the pip. This one, another rejection. Rejection here, finding resistance here, pushing away. Support and resistance, that's why it doesn't work. Just so you know, okay? It's, if you draw random lines on your chart, there are so many highs and lows in the marketplace, you'll find that random lines will be just as effective as support and resistance. So that's why I don't use support and resistance, because it is just far, far too subjective, okay? You can draw random lines on the charts and you will find that they work over and over and over again. So I personally stay away from support and resistance. The closest kind of retail trading concept that I will use is supply and demand. I still think that's flawed ultimately, and I've done a video on that on my YouTube to show why supply and demand doesn't really work. But what we're talking about here is we're talking about the classic kind of higher high, lower high, higher low, etc. Okay, so if you're drawing on your charts, okay, that to that to that to that to that, so you've got bullish trending conditions here, yeah. Okay, let's just draw that on. Every single one of these points here is a liquidity area. Okay, every single one of these is a liquidity area, and these are our external liquidity areas. Okay, on most time frames they're swept less often, but when you do get a sweep of one of these liquidity areas, like we've got one here for example, they can return really fantastic trades. As you can see with this one, okay, you've got an external liquidity sweep, and then you have a bullish trend which goes on for multiple days. So you could have got in here using one of our setups effectively, and then you could have held that all the way up for a massive trade over like a week or so if you wanted to be a swing type trader. So the external liquidity levels are my favorite liquidity levels. What you'll often have in these areas, however, is you'll have what we call range liquidity. So the range liquidity are these, let's just try and find a good example. The reason why they're more difficult to find is because they often cause a small rejection and then they all come back in. Okay, so if you look at this little section here, so this range here, okay, our external liquidity is this level. That's our external. And then what we're looking for is we're looking for the last significant high. Can everyone see my chart clearly, yeah?
Mm-hmm. We can.
Yeah.
My last significant high before the external high would be that one. okay? And that's then our range liquidity, okay? So these are areas within premium and discount. So that's our premium. That's our discount. Okay, and these are areas of sensitivity. So premium and discount is obviously the top half and the bottom half. What we like to do is we like to refine that to the top 25 and the bottom 25% of the range. Okay, the reason why we do that is because that's where the value areas are. That's where we're most likely to see reversals from, because that's ultimately what we're doing, guys. Okay, we're looking for reversals. Our job is as a reversal trader, and whilst we might be trading these on a continuation basis, okay, so we might be trading these like this. This is a really efficient range, so it's more difficult. Did we talk about EPA last week, Lewis?
Yes,
we did, didn't
kind
we?
I
of.
think we did. We did do
Okay.
EPA.
So whilst ultimately we're looking from range to range, okay, and we're looking for ways and reasons to get into these trades on these ranges, okay, so the best trades are the continuation trades, okay, and these continuation trades in line with the momentum, so we can see that the momentum in this marketplace is bullish, okay, but what we're looking for in here is we're looking for a reversal setup. That's how it works, okay? So trying to catch a major reversal, like trying to catch that one and holding it all the way up there, that's a swing trading approach. I think that's particularly difficult. It often takes a long time for these trades to play out. For example, I can find a trade most days, okay? Most days of the week, I can find one valid trade on one pair, and I trade EU, and I would recommend in the early days for you guys to trade EU as well. It's the most efficient. It's one of the most manipulated. It works really, really nicely with this strategy. I've tried and tested my strategy over multiple different pairs, cryptos, commodities, indexes, and I find that Euro USD is the one that it works best with. So I would highly recommend you do your testing on Euro USD. I would recommend that you stick to just one pair initially, and you master that pair, and you get really good at making 1R a day or 2R a day or whatever it is. Don't come out of the stocks here and try to go in and make 5R or 10R trades, okay? Good analogy I always use is like if you were playing golf, okay? If you were playing golf, you would not go and spend the most amount of money on the most expensive golf clubs to then go and book a round at St. Andrews and play 18 holes at St. Andrews when you're learning how to play golf, right? What's the first thing you're going to do when you're learning to play golf?
Buy a cheap stick.
Yeah, buy a cheap stick, and you're probably going to go down the driving range and you're just going to learn how to hit the ball straight, right? You're just going to learn how to swing, hit the ball, and hit it straight. I would highly recommend that you use that analogy when you're learning how to trade. The most important thing for you to do right now is to get into a valid trade, pull out of the marketplace 1R, and try and do that more than 50% of the time. Okay? Don't be greedy and try and hold on to things for longer. Get really, really good at pulling 1R. So if you can get into a trade, okay, like this, for example, and you can hold that trade with a nice safe stop to 1R, even though that's ran all the way up to 6, it doesn't matter for now. Get yourself out of the marketplace 1R, then tomorrow you come back in, you do it again. You take the opposite trade in this example because we probably swept some liquidity there. Yep, so we swept out that external liquidity there. Okay, we've swept out that external liquidity there. We've got then another setup coming back down, and again, you try and get 1R. Okay, the following day, you come back into the marketplace, see this bullish structure up here. You then take that trade there, stop below the low. We're going to aim for this external liquidity up here. So that's our external liquidity there. And again, you're going to aim for 1R. It doesn't matter that the external liquidity is higher than that. All we want at the marketplace is 1R. And just keep doing that over and over again. And to be fair, I know lots of traders that just trade 1R, but they have a really high strike rate. You know, look at it this way. A lot of people don't understand the numbers well enough. So if you got 1R out of the market, let's make this a bit bigger so you can see it all, okay? If you got 1R out of the marketplace at a 80% strike rate, okay, and you took 10 trades, How many are you winning?
8.
8. Okay. How many are you losing?
2.
2. Okay. So you're winning 8. You're losing 2. So your total for the week?
6R.
6R. There we go. Perfect. 6R. Okay. That's at 1R. And all you've had to do is take 8 valid trades. That is really easy. By the way, you see people on like Instagram and stuff talking about 80% win rates, taking like 5, 10R trades. It's bullshit. If they're doing 1R, I would see it absolutely. I could see that absolutely. Okay, so 1R, 80%. Now, what a lot of people try and do is they try and do this. They try and get 5R, okay? And they probably get, or let's do say 3R. They probably only get like a 20, 30%. Let's be generous. They do a 30% strike rate. Okay, so out of 10 trades, how many are you winning?
3.
3, okay.
7
3,
lose. So
which gives you 6, yeah, okay. And then you're losing 7.
9R.
Minus 7R.
3.
Sorry, yeah, you're
3.
right. Apologies. Okay. So in this overall, you're coming out of the week 2R, okay? And this is the problem with so many traders when they're trying to learn, okay? As you can see from these, how many of them get to 3R? That one doesn't, that one does, and that one, I mean, if you held it longer, it would have. But you can see, you know, emotions come in, people get, you know, people think, oh, coming to the end of the day, so I need to close it early, and that doesn't happen. People don't stick to it. So you're much better off in the early days trying to win more consistently, taking 1 hour out of the marketplace and, you know, having a good profit and loss by the end of the week, rather than going for higher, because as soon as you then start increasing those numbers, let's say now you're going for 5R, for example, okay, and you drop your win rate down to 20%, okay, you're then taking 10 trades, you're doing 5R times 2, so you take 10 hour at the marketplace, minus 8, okay, the same results, yeah, okay. So as you try and increase that R rating, what happens is you then start taking more risks, you start revenge trading because you're losing more. The other thing you have to accept on this as well is, imagine if you lost 8 trades in a row.
The psychology would be pretty messed up.
Exactly. You'd feel like shit, and then what are you likely to do?
Blow up the account.
Yeah, make mistakes, yeah? Make mistakes. However, if you're winning, you know, 8 trades in a row, how much more likely are you going to be sticking to it?
Very much. Yeah. Actually, we hear all over the internet that you have to take 1:2 minimum, 1:3. So that is
So what I do personally is I do this. So I take 2 positions. So let's say my positions are 2R, okay, and my strike rate is about 50-60%. Okay, let's use 50% as an example. Okay, just as a rough line. Okay, I'm aiming for my first trade. So first trade, I'm aiming for somewhere between 2 to 3R. Okay, and my second trade, I'm aiming for something like 5R. Let's just say. Okay, it could be more than that, but 5R plus, should we say? Now this second trade plays out probably 50% of the time, and my first trade probably plays out 70% of the time. Okay, so if I just use the first trade first, like that. Okay, so my first trade, I'm doing 2 to 3R. Let's be conservative. So I'm doing 2R at 70%, 70%. So I'm winning out of those. 14R plus, and I'm losing out of those 3R negative, yeah? So minus, plus, okay? And so my total for the week ultimately is 11R just off those. So I could trade that strategy, and I'm pretty comfortable with that strategy. I'll be really, really happy with it. What I like to do, however, is I like to split my trade over 2, okay? Now this one, I'm aiming for 5R, okay? This one probably, to be fair, again, being conservative, probably happens for 40% of the time, okay? Which means over the week, out of my 10 trades, I'm taking out of that 20R, okay? Out of that week, however, I'm losing 6R, okay? And then ultimately, I'm taking 14R at the marketplace. So I like to combine those. Now, the tough thing with doing that is that if you lose, ultimately, you lose
everything with
2R.
Both the numbers will change.
Say again?
Actually, so let's say if you are splitting the positions into,
Yeah.
as far as I'm understanding, you are splitting your positions into the
Yeah.
first TP is like 2 hour and the second TP is 5 hour.
Yeah.
So if you are booking like in these numbers, yeah, it would be 5.5 hour.
Yeah.
Yeah.
Okay. So that's effectively what I'm getting out of the marketplace. But I know both of my strategies are profitable. It's important to understand that one is more profitable than the other. But you can see, even if you reduce these numbers, okay, even if you reduce these numbers,
But
okay,
even the 1 hour ratio looks good
yeah,
while comparing because you have so many years of experience, bro. So you can aim this, but a newbie, I guess it would be very much difficult. So what you are suggesting that we need to stick with the 1 hour strategy,
so
that will be really
yeah. I
beneficial.
think what you need to do is you need to understand where profitability is, okay? And you need to understand that you have to play the numbers consistently in order to make money. There is a chart you can find online where you can look at risk to reward profitability, and it shows you like
Yeah.
what risk to reward you need to take and what strike rate you need to hit for that to be successful. As long as you understand your risk management really, really well, and you understand that it's going to take so many wins in order to make it happen, and to make it profitable, then that's the really important place to start. And that's why I would recommend starting with a 1R win. Okay, so just get really, really good at taking 1 hour at the marketplace. Now, what you can then do with that is in your journaling. Okay, and I would recommend that you journal in these early days. I don't do it much these days, I'll be honest with you, but I did quite a lot of it in the early days. What I'd recommend that you do with your journaling is every single day then, you then follow how far that trade went. So took out your 1R, but trade ran to 2.7. Took out 1R, but trade ran to 2.8. Took out 1R, trade ran to 4.7. Let's say you had those results consistently, okay, and you saw that every single one of your trades ran to 1.5. Well, after 2 or 3 months, you then start aiming for 1.5. By this point, you're now better at trading, you're more experienced, you're better at taking the setups, but what you've done is you've taught yourself how to win consistently. If you're trading 1% per trade and you can get a 60% strike rate, okay, if you're trading 1% per trade, aiming for 1R with a 60% strike rate, okay, then over, again, let's use 100 trades now, okay, over 100 trades, your account, you've done 60 wins, 40 losses,
20% gain.
okay, 20R gain,
Yeah.
which is 20% on your account. Okay, now 100 trades is probably going to take you, if you're taking 3 or 4 trades a week, maybe more.
6
Let's
months.
say you're taking
Around
5 trades a week, 5 times 100 trades. What's that? 20 days, right? 20 trading days, yeah? Sorry, 20 trading weeks, apologies. So 6 months' time, if you could grow your account by 20%, you'd be pretty happy, right?
Yes, if we have a good capital.
Yeah, if you have a good capital, but you could pass 2 prop firm challenges with that. And then you can have 100 grand behind you. So it's really important to understand that you don't need huge numbers to make money in trading. In fact, you actually need smaller numbers than you think, okay? Because 20% on 100K's worth of capital, you've made yourself 20 grand on a prop firm. Let's say you've passed your prop firm challenge, you've got a 100K funded account, you've now got 20% on your capital in 6 months. That's 20 grand in 6 months, okay? 40 grand a year from taking 1R trades, I think you'd all be pretty happy with that, right? And it's a simple and easy way to trade. Now, I'm not saying that you'll continue to do that forever. You might aim for 2R. And if you can keep that strike rate relatively similar at 2R, as we can see in these trades, then you double your profits, right? So now, okay, you're going 1% per trade, 2R, with a 50% strike rate instead. 100 trades, you've made 100R and you've lost 50R. You've now plussed yourself by 50R, which as we know is now 50% on your account. You've now made yourself 50 grand in that same amount of time. So it's really important to understand.
Numbers are just...
Say again? What were you saying, Abby?
Yeah, got it. I mean, you were right. It's a numbers game.
It's a numbers game,
Because
exactly. You just need to understand.
currently it was at 20R, now it is at 50R.
Yeah,
Just,
and that's with a lower strike rate. You know, when this strategy, if you can't get 2R out of the marketplace 50% of the time, you're doing something wrong. Okay, you are doing something wrong. So it's really, really important to understand that, I think, when you go into this, really. Okay. Right, we got a little bit sidetracked there, but I think that was a good piece for us to discuss. So we were talking about our setups, weren't we? So let's just go through that. Okay, so this is our classic ISC setup. Okay, we've got our daily. Oh, who is that with the noise in the background? Oh, is it Alan? I think it's Alan. So we've got this daily high, for example. Okay, our ISC MSU is a sweep or a raid on that liquidity. We don't want any more than 3 candles, and we want to see some clear rejection, so the more wick we have, the better. We want to see 3 candles that leave behind an imbalance. So this candle, for example, would be our imbalance candle. And then we have our MSU setup, which is structure that's created, a sweep on that internal structure, and then we have an engulfing candle down here, which is where we get into the trade. Stop above the ISC, entry below the engulfing candle, and then we hold down to whatever liquidity point we have down here. Let's say, for argument's sake, we're going for 2R. Okay, that is our classic ISC setup. I'm going to show you a couple of them now. I think I spotted some as I was playing around with the charts earlier. I'm going to show you a couple of them now, and we'll go from there, really. Okay, so I believe there's one in here. I might be wrong. Yeah, I think I am, actually. It wasn't a great sweep, that one. No, it's not, to be fair. I mean, yeah, and this is where you have to use a little bit of subjectivity, okay? So this technically is an ISC setup, okay? We've got that raid of liquidity. There isn't, however, an MSU in here. So I personally wouldn't really be sure. I mean, there is what we call a hidden MSU, okay? So if you look at the candles here, so that's our ISC. We then had high, low, high, sweep, engulfing. So we would class that, let's move that down, we would class that, I'm going to move it across so you can see it a little bit easier. You can class that as a hidden MSU, okay? It's valid to trade, but you need to understand that it is higher risk, okay? Because it's on a much lower time frame. This is on, you would have an MSU there on the seconds time frame. If I just give you another one there, okay? So that's the MSU, that's the raid on liquidity. You'd have to be really, really quick on your feet to get into that trade. It is valid, but if you start looking for hidden MSUs all the time, you'll probably find that you get caught out quite a lot, okay? Because you'll find those hidden MSUs everywhere, basically. So I like to use like the ones on the 1 minute time frame, but that would be a valid trade for sure, okay? Let's see what we have.
I was going to ask you about the time frame.
Yeah.
For someone that is trying to the bit of a beginner, what time frame would you recommend to look at starting a trade?
So the strategy, I personally use multiple time frames from the daily all the way down to the 1 minute. Okay, so what I'm looking for is liquidity levels on my daily time frame. Okay, so I'm looking for a daily level like this. Okay, and if I get a daily level like that swept, then I'm then looking for so that's our daily level. Okay, so that was our daily level that was swept there. Okay, that's our previous day's low. I'm then looking for a setup that's going to give me so that would be our range down there. Okay, I'm then looking for liquidity levels for me to enter in off the back of. So I've got it's a bit of a messy one, probably on the 5 minute chart it's a little bit clearer. Okay, so yeah, so we've swept our daily level. Okay, I'm then looking at this ISC on the 15 minute time frame. Okay, I'm then going to drop down to like the 3 minute chart and try and find an MSU, which is here. So push, 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 raid, engulfing. Okay, I'll get that down there so you can see it. So that is our MSU. So that's our manipulation. That's our manipulation. That's our white, that big white candle. That's our engulfing candle. That's my entry. Stop below the ISC. And then push him to 2R. Okay. So I'm using multiple time frames. When we have these daily levels swept, we have to understand there's lots of liquidity underneath them, and reversals are very likely when this happens. So you can get into trades like this quite easily when you have the daily levels. So I'm setting up my levels on the daily. I'm looking at the 4-hour time frame because that gives me some real good structure. Okay, you know, I've got structural points here, ranges, etc. The range finder, which is this little what's called a GAN tool. I'll show you the settings, and you can go back and look at these on the recording. Okay, those are the settings that I use. So I use the 0, the 1, the 25%, the 5%, and the 75%. I have all my settings to grey, sorry, white, and just like see-through, so 45% see-through. And for me, that gives me then a really nice like range finder that I can draw. The way that I use this range finder is I'll use it on the hourly time frame. So the daily and the weekly is just my liquidity points. I'm just looking for liquidity areas on those levels. Okay. The hourly time frames is where I'm looking at my ranges. Okay, and this is where I'm looking for, you know, my premium and discount levels, where I'm looking for price to come back into to trade off of. I also use the hourly time frames for my EPA levels. Okay, now this Alan might not make much sense to you at the moment. I recommend watching the EPA videos in the mentorship course, and also go back and watch the Bootcamp from a couple of weeks ago, because that goes into EPA in quite a lot of detail. It stands for efficient price action. So when the markets make moves like this, okay, they leave behind inefficiency. And that inefficiency is from that high there, okay? That market is what's called inefficient until it comes back and be retested. And you see how it retested that section there, and then it almost immediately rejects. Okay, that's because that range now has been made efficient. And the EPA will normally be sat around halfway of the range. Okay, so price leaves, it breaks structure to the left, so we get a breaker structure there. Okay, get a breaker structure there. It then leaves behind an inefficient range. Okay, this price hates being inefficient. Okay, what it means when that happens, okay, when that move happens and breaks structure, what that means is that all of this section up here is now inefficient. Okay, there are more buys. See, it's all white candles, right? Okay, it's more buys within that section than there are sells, and so you get often these corrective pullbacks as people are selling into it and orders are getting closed. Where the majority of orders are sat and need to be rebalanced to is at this level here, okay? Because this section of price right now is efficient. Price is pushed away from it, nothing's been retested, and it's been left and made efficient effectively. This section is efficient. We've had, you know, moves up and down in here. None of this section, as you can see, has been left inefficient. We had this little section here, okay, which was then quickly made efficient. Okay, by that little level there. Okay, so that's now an efficient range. This push up here then came back down, that was made efficient. This push up here, however, it wasn't efficient until this. And this is why when people talk about trending market conditions, all that's happening is the markets are being made efficient. Okay, that's why price moves like that, just so you know. Okay, oh, shit, there we go. What's going on? Okay, so ignore that little bit of mess down there. Okay, that's efficient now. That's why we call it EPA, efficient price action. This section is efficient now. That's why we call it EPA. Okay, until that happens, it is technically what we call IPA. So if that happens, for example, this is inefficient pricing, and don't be surprised if price comes up and does that. Takes out external liquidity, makes this range efficient, and then drops down. Okay, so it's one to watch out for. If you see that price is, you know, moving up, I'll see if I can find you an example actually. Let's jump into this little section here, see if we've got anything in here. And this is to be fair, this is the beauty of Euro USD, is that it is very efficient. So you don't often have these sections where no, see, that's efficient as well.
Is that not one there at the centre?
Yeah, there is one there, but it hasn't come back and been retested,
yeah,
which would be a very attractive area going forward.
Okay.
Again, this is why I love trading EU, because it, as you can see, every single one of these lows is being retested, right? And you know, sometimes you'll look at reversals in the marketplace, and I'm sure you've all been here, and you look at that little section and you're like, what the fuck is that reversed off? Because it's literally not tested anything. Well, it's the EPA there. Okay, that's what's happened. It's come back up. You know, if you traded, I don't know, support and resistance, supply and demand, you look at the supply zone and you're like, why the hell has price reversed without touching anything? Well, what it's touched is that EPA. That's what it's touched. Okay. Okay, so this is actually, I found one. Fair enough. Okay, so let's just draw on this to this to this. Okay, we then get all this noise in here, yeah, and then we get this sweep and then it's push. Okay, so this is what we would class as a complex pullback. All right, all of this to this point, and there's actually, I found another one here, another one there. This is an even better one. Okay. Okay, so that is our EPA level. You can see that price did not come back to retest it. It just continued pushing down. It created new structure. Okay. That part of the range was then made efficient, which then created a reversal. We then had this corrective pullback into, guess what, the EPA, and then we had our sell-off. Okay. This section here was made efficient there. Okay, so that's efficient now. This section here was made efficient there. Okay, so this is what we would class as a complex pullback, because we get this sort of squeezing sensation. Okay, and this leads us nicely on to what we would class as a BCR setup as well. So I'm going to talk you through that now. So efficient price action. I know we're digressing, we're jumping around a little bit today, but Alan, what you need to do, dude, you need to go back and watch the mentorship course and watch the bootcamp. Okay, try and get through a video a day this week, and I promise you by the end of the week you'll be feeling 100 times better with your trading. A lot of it will make so much more sense. Okay. Okay, yeah. So that's our BCR trade. I'm going to leave this drawing on because I want to kind of go through the order of priorities like we've discussed before. Let's just go back to these ISC trades. I can't remember what we got to now. We were talking about the ISC, weren't we? Let's go back down to here. Okay, so this is our ISC setup. Okay, this is our classic ISC setup. The ISC version 2, if you want to take it, is higher risk, but can be very effective. All you do is you take your trade on the manipulation. Okay. Now this, to get you into 2R, will probably have a slower strike rate, a smaller strike rate, but ultimately will give you a much higher risk to reward. So your 2R trade, as we saw there, then becomes a 7R trade. So again, if you're trying to get 1R out of the marketplace, you're talking easy peasy. Just be prepared for the fact that you're going to have more losses, okay? Now, the way I like to trade ISC MSUs is I like to trade them after Asia. That's my preferred place to trade them. My kind of daily go-to setup that I trade is a Asia sweep, hopefully coupled with some kind of major liquidity. So we've got a liquidity point there in line with Asia, as you can see. That is my ISC setup here. It's a higher time frame one. It's probably a 15-minute one, to be fair. Maybe even 30-minute. Okay, so that's my ISC setup there. So 3 candles above, and you can play around with the time frames. Ideally, we like them less of a close above like that, but it's still a valid one. Okay, it's still valid. 15-minute, you can see it pretty clearly. Okay, we've then had push down, pull back, push down, manipulation here, engulfing here, stop above the high, down to 2R, or Asia low. If you're trading the Asia sweep, then Asia low is particularly cool. Okay, that's normally a really good place to get out because that's often where you can find the reversals. Again, using the same theory. Okay, we've had that raid on. We've had that manipulation up here. Okay, so that's our MSU. So we've had that raid here. You could just enter like that. And again, your 2R trade becomes 5R. It's higher risk, as we've discussed, but it will actually get you into higher value trades. Okay. Down here, do we have one? Nope. 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 Yep, so we've got one here. So you've had a sweep of Asia liquidity. Doesn't quite take out that high there, annoyingly. Okay, that would have been even better. Sweep on Asia liquidity. You've had a push down with an imbalance. Then you have this push down, pull back, push down, raid on liquidity like this. Okay. First entry would be here. You'd have to probably do quite a wide stop on this one. 14 pip stop. I don't particularly like that myself. I'd probably tighten it at least to the imbalance. Then your first target off, 2R. So let's say we're going to use the London low of yesterday. So 1R, 2R, you know, anywhere between here would be absolutely fine. You could take it off at this liquidity point here. So any kind of previous highs and lows you could be using for that as well. So whatever you feel comfortable with, as long as you're getting your minimum R out of the marketplace. And you need to be able to comfortably get it out of the marketplace. Again, that's the MSU version 1. MSU version 2 would be on the manipulation. You get yourself a 2R instead of a 1.4R. Okay. This one, no MSU setup there, I don't believe. Let's just jump back. Remember, just like any trading strategy, you know, you're not going to get the setups every single day. Yeah, no, that's too noisy for me. The way I would have traded this one is I would have traded one of the RTO setups, okay? And I'll come back to those in just a moment. But basically, an RTO is effectively a larger MSU, okay? So it's like an MSU setup, but on a higher time frame, okay, like a 15-minute chart. Same principle applies. You enter on the engulfing or you enter on the manipulation. It's up to you, okay? And you hold down to the first liquidity. This would normally be like a 15-minute chart, for example. So that is our ARTO, okay? Which stands for Advanced Return to Order. Okay? So Advanced Return to Order, that's our first one. And then, very, very simply, the flip side to that is just a simple RTO, which is just that. Okay, there's no manipulation. You're just entering like that, stop above a high, profit below the low, and then that's our simple RTO. Okay, and it's literally just a range retest. Okay, we're looking for a retest of a range, and that's literally it. They make sense. Hello?
On which time frame is the range?
So I like to use it on the 15-minute, for example. Okay, and all we're looking at doing is we're looking for price going back into that premium pricing. That's literally it. Okay, you can enter on the engulfing. You could enter just on premium, however you want to. Again, I use these less often, but what I'd probably be doing with this one is I'd be looking at that EPA there. I would wait for a rejection. I put my stop here, and I would just hold down to Asia. And then I would probably take some profit off as I go. Okay, so take half of my profit off there.
You need an ISC before.
So this is where you can use your discretion on certain things. So you need an ISC ideally in every trade scenario. That's my preferred choice. Okay, when you don't get them, however, and you can see that price is very, very bearish, we're also on a Friday. Okay, what does Friday usually do in the morning? Do you remember from last week, Lewis? What do we normally get on Friday? So Thursday and Friday, what do we normally know by Thursday and Friday?
Where the manipulation has occurred?
So
where it's going to reverse in the opposite direction.
Yeah, so what we normally know by Thursday and Friday is the direction of the big weekly move, right? So accumulation on Monday, manipulation Tuesday, latest Wednesday. So by Wednesday, Thursday, Friday, we should know what the big move in the marketplace is. Let's just use this chart as an example. Hopefully we get it. Yep, we do. Perfect one. Okay. So Monday is Monday is here. Okay, so Monday is here. Okay, so we have our accumulation here. That's our accumulation. This, therefore, is our manipulation for the week. Guess what time it happens? Lunchtime Tuesday. Okay, so Tuesday, Wednesday, around lunchtime, you should normally have the manipulation for the week. It's taken out this liquidity here. It's retested imbalances and things like that in there. Then the rest of the week, we know that we're probably going to be bearish. Okay, that's our distribution. That's our distribution for the week. So we normally know by Wednesday, Thursday, Friday what the direction of the market is going to do. And what you'll find is Asia sweep trades will normally happen on Monday, Tuesday, Wednesday. Asia continuation trades normally happen on Thursday, Friday. So don't expect on a Thursday for price to come up and do this. We would love that, of course, but it often won't happen because now the momentum is in the marketplace to take us bearish. So the likelihood is that we're just going to continue bearish. So the ARTOs and the SRTOs, we want to be using those. So we've got one, it's a 5-minute one here. So we've got a little one there, look, okay? You could class that as an MSU, to be fair. Engulfing here, or let's say you trade on the manipulation, okay? That would be our trade, okay? Because we've had this breakdown, and this is where you then factor in all the different parts of the strategy. We've had our accumulation, we've had our manipulation, so the likely outcome is that the rest of this marketplace is going to be bearish because we're quite heavily bearish anyway. This very clearly looks like a pullback. Let's say you could only see that. What do you see? What's that marketplace? Where's the momentum?
There, with the bears.
It's bearish, right?
Is it?
Yeah. Okay. Heavily bearish marketplace. Accumulative Monday. We know that that's where price is accumulating orders. We know that prices come back up and manipulated for that massive manipulation. So we can expect now bearish price action. Okay, because we know the momentum's bearish. And this is where you can use your ARTOs and SRTOs. So we've got one in here. We've also got one in here, look. Okay, and this is where you're just literally trading range to range. So that's our range. Okay, we enter on the manipulation, stop above the high, profit below the low, 2R out, nice and easy. Okay, so this is where you can just use range to get into trades. So we always want a manipulation. Okay, but sometimes you're just not going to get it. So the ideal scenarios we have manipulation and a sell-off, of course, but you're not always going to get that, and that's okay because we have multiple different entries that we can utilize. Friday we do actually get a raid, okay, but we know very, very likely that Friday is likely to continue in the morning at least the direction of Thursday and probably Wednesday. So for us, it's just a case of, you know, you might not even have to use a particular setup. It might just be a case of getting involved when you see some momentum. So we know that momentum's coming into the marketplace when what happens? How do we know that there's heavily bearish momentum? What does the candlesticks usually leave behind?
Imbalance.
Imbalance, yeah. Okay, so we've got that imbalance there. So we know now that this marketplace is probably going to continue bearish. For me, I would just be, it's one of those situations where I've just got to get in and just hold on. So I'm going to get in, stop above that high, because that's where if the price comes above there, that would be where my trade is invalid. I'm going to take out profit at the bottom of Asia, and then I'm out. Okay, and then obviously what we're then expecting for the rest of Fridays, we're expecting that end of play reversal. So you know you could probably get in something like this, nice simple trade, stop above there. I mean, you might have got a break even on that one. I mean, if you'd been brave and you'd held, you might be right.
Right.
Yeah, it's going to take you a couple of days. Yeah. So I would have, to be fair, that's all of Friday. I would have probably, because price was pissing about that, I'd have probably taken out some profit a little bit early, to be fair. So that's our end of play reversal, okay? And then that's our weekly cycle complete, yeah?
Okay.
Yeah. So ISC MSU is what we want to be using most of the time, okay? Your ARTOs and your SRTOs is where we can use where we can get into the marketplace for more simple entries. And then we were speaking about earlier, there was a setup back here earlier that we were talking about that I just want to go through with you. I can't remember where it was now. I think it was quite far back, wasn't it? Oh, have I wiped it? Nah, surely not.
Is that the one with the efficient
here it
and
is.
inefficient?
Okay. So this is the third setup. Okay, so you've got your ISC MSU. That's our main go-to setup. That's the most important one. That's the one. The reason why that's most important is because it has the most moving parts. Okay, the other ones you have to use other elements to get into the marketplace. You have to use your momentum of the marketplace. You have to use your weekly cycle and the day of the week. The ISC MSU is a standalone trading model that you can use really without much other confluent factors. Okay, yes, it's good to be trading in line with the marketplace. Yes, of course, it's good to be trading in line with, you know, the day of the week and what you're expecting on that day. These can all help, but you can just trade. You could literally go to any day, look at the Asia range, find an ISC MSU, take it, and you'd probably have really good success. Okay, so the BCR is often a larger pattern. So this is on the 2-hour time frame here, to be fair. It's kind of a retail pattern. It works very, very effectively. I'm a big fan of the BCR, and I'll draw it out for you first. So what it requires is a push down and then a build up, which is the B, a build up of liquidity. Okay, which is this kind of squeezing of price. Okay. Then what we usually have is we have a raid of some kind, a significant raid, a push down, a retest, and then a break of that liquidity. Okay, this is our build up of liquidity. It's poor drawing, to be fair. That's our build up of liquidity, like that. Let's just draw it out and make it a little bit tidier for you guys. Okay, so that's our build up of liquidity. Okay, so we've got all this liquidity that is building up, building up, building up. We often then have a build of liquidity on the other side as well. Okay, although each one of these is taking itself out. Okay, so that each one of these is raid, 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 raid. Okay, we then normally have an initial, big sweep. It'll often come back and like retest an EPA or something like that. Okay, or it might also like take out a previous high like that. So it could also do that. Okay, and then once we've had a significant liquidity move. Okay, so that might just be liquidity. Once we've had a significant liquidity move, we can then usually see some sort of imbalance, and then we can get in like this. Okay, and like we've always discussed, you can get in on an MSU. Okay, so that could be an ISC MSU setup. It could be a simple RTO. It could be an advanced RTO. It doesn't really matter. Okay, so this is an example here. Zooming into this piece of price. Okay, we've got a build of liquidity here. On this side, we have a build of liquidity here on this side. Price then comes up and creates an EPA, and then you see how you have this like really extreme move. That is effectively an ISC. That's a really high time frame ISC. One wick above, push down, imbalance left behind like that. Technically, we've got MSU here as well. So we've got MSU there as well. So MSU, and then you could enter on the engulfing. Stop above the high. First profit target could be at our first liquidity point. So lovely 4R. If you're going for 1R, you get that out easily. If you're going for 2R, you get that out easily. Okay, the important thing to note is that there's a significant move that's taken out all of these highs all at once and retagged EPA. Okay, now what you'll often find around these levels is you'll often find a significant liquidity level to the left. Let's see if we've got one. Maybe there was something in there, I'm not sure. I can't really see on this chart because it's so historic. But you'll often find these setups at significant liquidity levels. So like a major swing point that's been, what's that? November 2016, and that's May 2022. Okay, let's drop down to the hourly time frame. Let's get rid of that one. Okay, so yeah, so almost perfect.
And that's essentially the EPA level as well. So there's
so build up a liquidity here, big build up of liquidity there. Yeah, okay. You've got this this squeezing section here. This little sweep here. Guess what it creates? At that low, EPA. Okay. Obviously that sweep up wasn't as significant as the previous one, okay? But it clearly shows us there's a raid on liquidity, and then you could have got in. Let's see what we get on, say, the 30-minute time frame. If we've got the candles. See, this one, it isn't the cleanest, to be fair, but it is valid. It hasn't got the imbalance. I would have preferred an imbalance left behind there, but I would have probably just traded off the Asia range anyway. And this is where then you can maybe say, right, well, the BCR is effectively completed, okay, because we've then started taking that liquidity. So do we just use like an advanced RTO to get into that, or do we use the Asia sweep from the next day? So this is higher time frame, as you can see, but you can see the shape and the momentum of it, okay? And ultimately what it's done is it's taken out that significant level. So these are particularly good. You often get these build-ups. Why do you think you get those build-ups? Why do you think you get build-ups of liquidity above major and significant key levels? Why do you think that happens?
If it's a significant level, then there's going to be a lot of orders around it.
Yeah.
And it's kind of adding to the pressure of
exactly.
what's actually going to do.
It's adding to the pressure of the marketplace. So, what's ultimately happening here is there are people, traders, expecting price to do a certain thing. Let's see if we've got one on here. Okay. You'll often then get these. No, I don't think there is one there, to be fair. I think there's one there. Potentially. Nope. One there, maybe? Yeah, I think there's one there. And again, this is why this is number 4. Okay, because this isn't my preferred setup. It happens a lot less often. Well, we can't actually get down to the 5-minute annoyingly. Let's see if we can see it on the 15. Yeah, okay, so you've got another one here, okay? So what's happening is orders are collecting, right? Okay, people are buying early, so it's a significant level over there. So people are now buying early, okay, and they're expecting to get into the marketplace early. They're thinking that the selling pressure is coming off, right? Yeah, because we're coming all the way down here. So people that have been selling from here in this range, where are they likely to take their profit off if you've been to sell from here? Let's say you're a swing trader. Where are you going to take your profit off?
Going to take it at the bottom at that significant point,
discount,
because
right?
you don't want to risk it going the other way.
So you're likely to get that at a discount. Okay, you get that at a discount. You start taking your profits out. You take a little bit more profit there, a little bit more profit there, and that's happening with the masses. Okay, so what happens here is you get these build ups of liquidity. Okay, which then get raided. Okay, raid. You can see that one. Significant push down, big sweep. Okay, raid. You could have traded that maybe like a simple RTO setup there, or sorry, an advanced RTO setup there. Manipulation would be there. Okay, and that's all an advanced RTO is. It's just a big manipulation setup. Trade off the engulfing, stop above the high, and then you hold down to that liquidity point. Okay, for you, getting your 1 or 2R out, easy peasy. You get your 2R out by that first low. If you want to get your 5R out, it's massive, obviously. So. Yeah, pretty big. So those are kind of the 4 setups. Do they all make sense?
I think so. I would have to go through a couple of them myself on the chart just to see, okay, that's one, that isn't. Or
what we'll do today, we'll take a little break now, but what we'll do today is we'll go through the news trading next, because I think that's a really important section for us to spend a bit of time on. News trading is actually a lot more simple than people make it out to be. It's actually really, really quite easy. The important thing is just to have patience really with news trading, and I'll teach you how to trade news now. I used to hate news days. They used to be my least favorite trading days. Now I love them. I get quite excited for them because the opportunities are massive. So we'll talk about news trading next, and then what we'll do is we'll go back in time and we'll just go through the charts and we'll just talk through how I would be trading the marketplaces. Okay, so we'll spend maybe another half an hour or so on news trading. We'll go through that in detail, and then from there we can then start talking about kind of your daily setup, how to set up the charts, how to set up the marketplace, what to be looking for, talk through some trades, how I would have traded them, and then we'll do some Q&A.
Okay.
Cool. Can I ask, has my screen been okay? Has the quality been okay, and you can see everything?
Yeah, I haven't had any issues with it.
The only reason I ask is I'm on Wi-Fi at the moment instead of Ethernet, because it looks like either a dog or potentially we've got like my room. This is my office. There's like a door which goes into it's like a cupboard, but it's like linked to the ceiling. So I'm worried I might have a mouse from the ceiling that's chewed through my cables, annoyingly. Because it's just literally...
No problem from my end.
Cool. Perfect. All right, well, we'll take a quick break now, and we'll come back in about 10 minutes. Cool. Cheers, dude.
See you in a bit.
Cheers, Alan.